Welcome back to Asset TV's View from the Floor. I'm Jillian Kemmerer, joined once again by one of our favorite guests, senior market strategist of the New York Stock Exchange, Michael Reinking. Michael, great to see you.
Hi, Jillian. Great to be back, and thanks for having me on.
Always. So we are headed to potentially the best first quarter in 5 years. What do you think has underpinned the success of markets this year?
Yeah, so I mean, at the end of last year, we did start to see kind of that expansion of breadth as you had, a perceived pivot by the Federal Reserve, right? That they were, kind of paying more attention kind of to the dual mandate, moving away from kind of the sole focus on inflation, right? And so markets started to price in kind of that the expectations of a soft landing as kind of hard landings kind of came out of that, of some of the implied probabilities within markets, right? And we've really seen, after a little bit of a rough start in January, we've really seen kind of that breadth start to expand again during this quarter, and we're now looking at 5 consecutive months of gains, right? That's the first time that we've seen that, or the last time that we'd seen 6 is actually back in 2021, kind of coming out of the pandemic, right? So, we've seen just kind of this really strong, kind of underlying bid to markets.
So we've talked a lot, especially last year, about the narrowness of outperformance, but you've mentioned breadth a couple of times. What are some of the sectors that are shining aside from tech?
Yeah, so I mean, more recently, so it's been very broad based. There's really not too much that's really underperformed. Some of the yield oriented sectors and defensive sectors have been kind of the underperformers. But more recently, we've really started to see the mid cap, the mid cap area of the market start to rally. Small caps continue to underperform, but they're actually moved into positive territory, kind of over the last couple of months. And it's kind of interesting because there's still some underperformance there as you have some interest rate sensitivity, but you're seeing some of the more speculative juices, start to drive some of that markets. And we've talked about kind of the concentration in kind of the larger indices, but even within kind of the Russell 2000, it's some of the, some of the larger companies that are actually accounting for a lot of those gains. And that's coming in areas like Bitcoin miners and kind of the AI optimism trade.
It's March Madness, so it's hard not to talk about things in the context of a bracket. And one of the ones that I've been watching play out rivalry-wise is market expectations versus what the Federal Reserve is actually saying. We've seen some market predictions that we're going to have rate cuts by June, but as you mentioned in one of your most recent market recaps, the Fed had some hawkish undertones to their last FOMC meeting. How do you think this plays out, and what are you expecting for the rest of the year?
Yeah, so I mean, it's going back to kind of the impressiveness of this rally. If you think about where we were at the end of last year, markets were pricing in kind of 6 rate cuts, by the end of this year. Now, I mean, at that time, I was arguing that if you actually got 6, that would actually mean something broke within the economy or something went really wrong. So it wasn't necessarily a positive thing, but we've really ratcheted back those expectations. So now markets are kind of pricing in closer to 3, but the Federal Reserve, as you mentioned, there were some hawkish undertones, last in the summary of economic projections. If just one official had moved off of their projections for 3 rate cuts this year, the median would have shown kind of 2. Right. And I think the conversation might have been a little bit different coming out of that meeting had we seen that median move. We did see the longer run expectations for rates, start to tick a little bit higher. We've been talking about some of the dispersion, and you're now really starting to see kind of some of the officials suggest that that those rate cuts may start a little bit later even than the June timeframe. Right, and are starting to kind of prepare markets for the possibility that we see less than 3 this year. Raphael Bostic said just 1 very recently. Last night, Fed Waller, who's a very influential member of the committee, suggested that there's really no rush to move, right? So I think markets are okay with that, right? As long as as markets are willing to accept a little bit higher, kind of an inflationary backdrop and a little bit higher kind of interest rate environment, as long as we continue to see kind of the economic strength.
One of the other major showdowns that I know you were keeping an eye on last week was your 2 number 1 seeds, AI versus the central banks. What showdowns are you watching going into Q2?
Yeah, I mean, I think those are going to continue to be kind of some of the major themes. But if you kind of broaden it out a little bit, right, I think what we've seen, that we've seen kind of some margin expansion, multiple expansion, kind of over the last year. I think really kind of the key for markets going forward is going to be the earnings, right? And so we're going to need to see earnings, hold up and then potentially start to kind of ramp on the back end of that to really kind of help underpin markets here, right? And if you think about the last couple of quarters, right, we started to see companies, beyond just technology, start to focus on some cost cutting and efficiency gains, right? That's going to help them kind of weather a little bit of an economic storm if we have that, a little downturn, but what it also will do is give them that operating leverage on the back end, right? As you start to see the economy reaccelerate. So I think that is, kind of the real, kind of linchpin alongside of, the labor market, for markets going forward.
Michael, thank you so much, as usual, for sharing all of your insights, and we'll look forward to watching your showdowns, not just on March Madness. We can tune off ESPN and go straight to the markets if we want some more.
All right. Thanks for having me and enjoy the holiday.
Thank you. And thank you for tuning in. From the floor of the New York Stock Exchange, I'm Jillian Kemmerer for Asset TV.